First guest up, Carter Williams, iSelect. I'm not going to let these guys introduce themselves because they'll take too long. Chris Rivera, Nativus, biotech space. Andy Daniels, most of you know, trader, investor. Where we at? Chip Nellinger, Blue Reef. Matt Bennett, Bennett Consulting. Mike Mock, Brian Clevenger, iSelect. Howard Getson. Howard, you guys, some of you met him, owns one of the largest artificial intelligence trading companies in the U.S. Howard will have some perspectives on things. We'll start with Carter. Kind of tee up our conversation to the crowd on where you think we are at in the ag space in comparison to where we were with,
That's a
we
pretty
talked
broad
before.
question. You want me to go into my MCI thing? Or?
Yeah, talk to him about the MCI analogy and where you think we are with
Yeah,
that.
so this could be a little out there. I was meeting with one of Michael Milken's guys when they reminded me in the 80s that Michael Milken issued $1 billion of junk bond debt to underwrite MCI's advertising in 1982. So if you remember, Judge Green had just broken up AT&T. MCI entered the market using AT&T's copper lines and $1 billion from Michael Milken to open up the telecom market. And with that, Milken thought that AT&T would write down about $22 billion of infrastructure by the end of the 80s, which they did. And really what happened was MCI uncovered the fact that people wanted to pay something other than 10 cents a minute for telco. And he underwrote McCaw and a whole bunch of other things. So my perspective is it's 1982 in the ag market. A, B, C, D are AT&T. We're seeing GMO and organic and sort of fooling around a little bit and trying to determine what the market is. But Amazon or Indigo are entering the market, and they are finding what the consumer wants. And where people are saying anti-GMO or organic, what they really mean is, I want to know what's in my food. I don't want to buy from Monsanto. They're really saying other things, but they just say it's organic. What that means is every single thing, if you go back, if you were around during the period of time, that came into the market from 1982 forward, Cisco, Microsoft, Apple, that brought new features. At that point, nobody thought you could charge more than 10 cents a minute for phone service. Now we get phone service nearly for free and have an iPhone. Poor people have an iPhone. So the analogy is we're going to see an evolution of technology occur because of the innovations that we're investing in that will be as dramatic as that or more. And that consumers, even at the low end, will have high-quality food systems. And you all may or may not be part of that system, depending on whether you understand how to play out that game. Is that what you wanted?
Yeah, no. Yeah, I think that's exactly what we're talking, and that's what we were talking earlier about trying to find where your niche is and try and find where your space is as they break some of this up from some of the bigger players and how they're going to try and go direct. And we think that's going to happen in a bigger magnitude for sure.
Yeah, if you looked at Jeff Bezos in 1996, he was being featured on the front page of Fortune magazine as somebody who might disrupt the book industry. Is that Indigo today? Indigo looks insane today, but 10 years from now, will he be Elon Musk or?
Yeah. Todd, go ahead.
Carter, I have a question, or maybe you can just comment on this. I think the difference between what you're talking about in '82 and what you're talking about in the ag space is that consumers could make a choice about what their minutes looked like, or whether they wanted to even use them. But you're talking about food, shelter, and water. They don't get to make a choice in that space. They either have it or they don't live. One of the two. And I think does that play into what you're talking about in the disruption? Meaning you're saying if they don't participate in this process, then it's going to bypass them. But I'm wondering whether, because it's something that's so vital to life, whether there's a different piece that you're not accepting or understanding, or maybe that I'm not seeing.
I'm saying telecom market that people at that point thought might grow a little bit, it grew 100-fold. And you're not AT&T. You know, Soren might be worried about this. Bungie, Cargill, people like that, they're AT&T, and this model AT&T survived after a $22 billion write-down. No matter what, someone's got to grow stuff, and then someone's got to retail it, so those two ends of the system are going to exist. But I think you're going to find that the consumers are going to drive a lot more attention as to what people want. And if we can trigger it, you all can make a lot more money. So if you can build product that more consumers want, that have more variety to it, and right now there's not a lot of signal that gives it to you. It might be that Amazon gives it. I mean, Amazon knows their customers, but I think if you pay attention to what customers want and somehow get better connected to that, but it's going to be a 8-year game before we even have a clue as to what it is, and there's going to be a lot of pain and suffering. But in the end, if it works out, farmers are going to make more money. But I can't tell you what the system is.
Yeah, and I think Chris Rivera, as the CEO of Nativus, just to give you an example of how fascinated I am with the change that's taking place in the biospace. Chris was in the biospace for a number of years and went over to Nativus. They're introducing technologies that I can't even comprehend. I sat in on meetings down in St. Louis with Todd Mockler at the Danforth Center. We both looked at each other like, I'm not sure this is possible. But they're mimicking low-frequency sound waves to deliver numerous things. I said Roundup. I sat in a meeting and I said, you're basically telling me you can mimic the code for Roundup. I could put a fence around 1,000 acres and I could mimic the code of Roundup but not put Roundup on my crop. They said, well, we think we can. And I said, yeah, that's not possible right now, right? So at the Danforth Center, Mockler says, yeah, it's crazy. They have already mimicked the code to Bacardi 151. Chris has it right here. You put this band on your head and you're drunk. I'm not kidding you. 10 minutes, 5 minutes.
5 to 10.
You don't drink. And you put the band on your head and you're drunk. Take it off, 5-10 minutes later, you're off. And we were talking, and this firm's out of Seattle, and Chris will kind of tell you, it's just mind-boggling, but they may do licensing. Think of this, licensing for Adderall to the gamers, like gamer-type people that just love, kids like to be on Adderall, like y'all nutsed out on their games or whatever they do. But you can put a band on. This band's curing a lot of tumors and things with dogs and pets, but it's just mind-boggling how this changes. Chris, you go ahead and kind of tell them a little on.
Thanks, Kevin. So yeah, we've developed a technology that we can take a known chemical. We know how it works. We can basically digitize it. We create it into billions of or millions of data points, and we create a WAV file. So the analogy that I use is we record the song of a molecule. And Kevin is correct. We actually have been in human clinical trials with this device for about 3.5 years. We've treated more than 150 patients around the world with glioblastoma. Terminal brain cancer is what John McCain died from. We are seeing about a 3-month improvement in survival in these patients when we add it to chemotherapy, which in 40 years we haven't seen that kind of improvement. We're treating children with a terminal brain cancer called diffuse intrinsic pontine glioma. We have several of them that have now, these patients usually only live about 6 to 9 months. We have one little girl in the Portland, Oregon area that's been on the device now over a year. We have a couple of others that have done very well also and hope to have our first FDA approval next year. But as Kevin mentioned, we actually are about to spin out a subsidiary to take the non-medical applications. So we have Bacardi 151. We're anxious, and Andy's anxious for us to record other types of alcohol as well. We also are looking at recording nicotine, caffeine, etc. So imagine, as Kevin mentioned, you're a gamer and you want to get the effects of Bacardi. You can have an app on your phone for Nativus, and you could download an hour's worth of Bacardi over your phone and sit in your room and never have to leave. And then, and actually, the effects wear off about after 30 minutes for most people, but everybody's a little bit different. We were meeting with a banker in Canada recently, and he at first said, I don't want to try it. And after about 15, 20 minutes into the meeting, he asked how to turn the device on. I showed it to him. He put the head coil on finally about 5 minutes later, and he says, due diligence. And after about 5 minutes, he says, I don't feel anything. And another 5 minutes or so go by, and then he says, I still don't feel anything. And about a minute or two later, his eyes get really big. He takes the coil off and he goes, I got it. So yeah, I'll be outside tomorrow morning. If anybody wants to try it, I'll have you sign a little waiver just in case. But this is really, in the drug world is where I've come from. I've spent 30 plus years in biotech, and this is really disruptive. The cost of goods is nominal compared to drug development. There's really little to no manufacturing cost once you go through all the FDA process. But in non-medical use, there's a huge amount of opportunity. We have proof of concept experiments with Roundup in ag, with the plant growth hormone, with a siRNA that modulates photosynthesis. We've treated hundreds of dogs and cats with naturally occurring tumors. We've seen tumors disappear in 2 to 4 weeks, and these were treated in Southern California in 3 veterinary oncology hospitals. So we're talking to global veterinary or animal health companies as well. And our business model will commercialize rare diseases in the U.S. and we'll out-license. We already have a Japanese pharma company that has the rights now to glioblastoma. They are now paying for preclinical work in animals for non-small cell lung cancer. So imagine you could put a vest with coils in it over your chest if you have lung cancer that potentially could help accentuate the effects of chemotherapy. So we're excited. The data is very, very encouraging. We're still early. We still don't understand a lot about the technology. We're learning every day. We've worked with Danforth. We're working with the University of Alberta, some physicists up there that are helping us try to figure out how this is really working. We mimic the effects. They're similar, but they're not exact. And so we're trying to learn better. How can we make it more predictable, more focused, more targeted? But it's exciting times. And again, this is a platform, so it can be applied across multiple different types of industries, and right now we're starting in human health, but we're talking to potential partners in other areas as well.
Yeah, Andy started a company that's doing some trials in ag at the Danforth Center with some of these, right, Andy? With some of this technology on the low frequency side.
Right. We were mimicking some chemical chemistry.
Pull that back, please. Yeah,
mimicking some chemistry as well as killing bee mites off of bees without killing the bees themselves. And we've had, some successes and a lot of things we're still trying to figure out.
Yeah, so just so you know what the Danforth Center is, it is in St. Louis. It was started in the early 2000s. Jimmy Carter was there for the inaugural event. I happened to be at that event. That's why I happen to remember it. And it was set in place to be a mecca for technology for agriculture. I think that's the term that they used at the time, that this was going to be, we didn't really have the Silicon Valley, but it was going to be the mecca of biotechnology for agriculture and other aspects. So they really work on plant and pathology and those sorts of things.
The reason I bring it up, and we talk bio, especially Brian too on the bio side, I think you have to make sure your thinking is correct. And when we see a downturn, we're asking ourselves, is like Celgene right now trading, it's sub $70. You've got several of these big biotech stocks that have just been beaten up. If we pop back out and we go into a bear market or we go into recession and we move 2 to 3 years, when those companies pop back up, will they be relevant? I don't know. That's my question. They may look like a bargain today, but I'm not sure when we come back out on the other side, and that's, kind of questions on the biotech side. Will we be relevant? Remember, most of the disruptions don't happen when times are good. They happen when things are bad and people have to shift and change and reposition. So I wonder, as we pop back out, even in agriculture, 3 to 4 years, what will be relevant and what will not be relevant? And I think those are the big questions of what we're trying to ask and solve up here to the audience when they're making their investments and choices for their businesses.
And specifically, at least in drug development, traditional drug development, the model's broken. It's taking a decade and billions of dollars to develop a new drug, and then they're charging $500,000 per patient. We can't sustain it. So a technology like this can really have a significant effect on the traditional drug development market in biotech.
Brian, do you have any opinion on that?
Well, I'm sitting here thinking that some of these comparisons, the interesting thing that's going on right now is so much technology is impinging on ag like it's never have in the past. you think about you think about the biotech world, Genentech, Amgen, all that. You realize how long ago that was? I mean, that took a long time for those companies to mature into reliable companies. I think Genentech still holds the record of having the most quarters of profitability of almost any company, certainly in the life science world. So, I think that what's going on now with the Indigos of the world, it's going to take a little time, and this whole area is going to need to mature. I see this through the lens of an investor. I'm a venture capitalist, and forgive me, and I see this as a time when, if you would have asked me even 10 years ago, I would have said, don't invest in ag. It's a terrible place for venture capital to invest. Why? Well, first of all, it felt like there was only 4 buyers for any of our companies. And now there seems to be so many technologies impinging on the ag world that you've got multiple buyers. We've got a company in our portfolio right now where a big data player, Google Ventures, bought a huge stake in it. And that was kind of unheard of, I think, not too long ago. And so it really makes for an exciting place now for venture capital to be involved. We've got more technologies involved. Startup deal flow, I'm with the Yield Lab also, and so we see thousands of applications to the accelerators. Data and big data just seems to be everywhere. I think it's almost to a mind-boggling extent for the farmers.
Right. Howard, like I said, has this huge artificial intelligence trading company down in Dallas, and it's very interesting. But one of the things Howard told me recently when we were down visiting is how much quicker they were able to compute in some of the power. Go ahead and tell
Well, that's actually what I was going to say to echo what you were just saying. We've hit a tipping point. I'll tell you that in our company, it's called Capital Logics. I've been doing this. I've been the CEO of an AI company since 1991. And I've been doing this specifically, trading markets using AI, since 2000. And it's taken me $40 million in over 18 years to get to here. But we've made more progress in the last 18 months than in the prior 18 years. And it's not because we got a ton smarter. We did. But it's because technology finally got to a point where you've got the calculational capacity, you've got data sets, and you've got an infrastructure around the world where you can get data in real time or near real time to do things that were literally impossible, but are now not only possible, but it's the table stakes to win. And trust me, mediocrity is expensive. So if you want to be behind that curve, ignore AI and what's coming. I'll make a prediction, and it's that AI is going to terraform the planet bigger than electricity and faster. Because with electricity, I mean, first off, think what electricity did for farming. Think what electricity did for hospitality, for manufacturing, for so many things. But it required an infrastructure. AI doesn't require an additional infrastructure. It's going to play on the infrastructure that already exists. And not only that, it's going to be delivered as a service where you'll get it from companies that have the giant supercomputers and the data centers. There's finally people in America who understand math and science and statistics again, where they're coming out of school capable of doing this. It's amazing. Can you put up the slide for me? Yeah. Kevin asked me to give you guys a gift. Anybody who signed up for this last year, you already signed up. And I've gotten a lot of people saying that they like it. So I just wanted to offer this to you. No charge, 100% free for friends of Kevin. If you simply text VT as in Van Trump to 972-992-1100, so 1100, we will get you our free premium newsletter. On Fridays, we send you 20 links about AI, new technology, and what's happening in the world, as well as 20 links about the market. And on Sunday, we have a couple short opinion pieces, but it's really cool stuff. I'll talk more on other stuff later, but that's what I really wanted to say is we're at a tipping point, and it's already happened. It's no longer something that might happen. It's something that's happening, and it's inevitable at this point.
Yeah. I think why don't we dig into the markets while we're on the markets and let Andy and Chip and Mike and you guys hear Matt kind of hash it out a little. I mean, you've seen it firsthand, big changes from traders who have left the business, who no longer spread trade like we used to spread trade and things of that nature, and talk a little bit about what the difficulties the farmers are facing now and how we can, adjust to those changes.
Sure, I guess I'll take a shot at starting. Well, you're right. There used to be a market that had volume and liquidity from front to back, and now everything is front end centric and the volumes really haven't changed much from 10 years ago. What has changed is the composition of players. So in the old days, back when fundamentals mattered, you would, volumes were driven by the ABCDs and by some large speculators and floor traders. Today, 80% of the volume are from participants that didn't exist then. They're algo high frequency traders that are and headline traders. And so you really have a completely different composition of the market, and that's made it much more. And with electronic trading, really a lot of the transparency has gone away. People say, well, electronic and everything today is more transparent. That's not the case in trading, in my opinion. And as far as the markets go, it's a little tough to make any sort of predictions right now when you have the G20 summit coming up on Friday, and particularly as it pertains to soybeans, it's a jump ball at center court. You could make the argument in the case of soybeans that, as you said earlier, Kevin, if you don't see something happen with the trade war and it stays status quo, we don't do anything to rectify things with China. You could see a situation where you have 1 billion carry out in soybeans this year, and if that were the case, yeah, 750 beans, that's a possibility. You're looking at, open funds are now short 120,000 beans and 70,000 oil, and short for the first time soybean meal. But I think to get to that kind of a level, you need to see the trade war continue, us to sell nothing to Brazil or to China, and probably doubling of this current fund size positions. Conversely, I don't necessarily think that's going to happen. I think somehow, some way, we'll find some resolution. And, even a short covering rally to cover what we have out there short now, coupled with headline traders that would buy it in the event of a summit pop, could get you a 50-cent rally in soybeans pretty quickly, just getting the market even again. And with the market now currently around 940 basis November beans, I guess I would think anything between $9.75 and $10 is certainly something I'd give serious consideration to selling and hedging, because you're really not here to play for home runs. This is a year to try to get some sales on the books. You can always trade against it, buy, sell, trade options, do some things with crop insurance and the like, but you need to be around to play next year. And given the global outlook, record soybean crop coming out of Brazil, maybe 122 million tons, 55 plus in Argentina. And if you start talking about reducing the energy components of Chinese feed rations, as Mike was talking about earlier, that could also take a serious impact on demand. So I guess I would be hoping for a rally to sell into, and that's kind of how I see the soybean market right now. I'll leave some other things for other people to talk about.
Well,
John,
go ahead.
I was just going to jump in. I would say that it's extremely difficult for farmers to manage the volatility, and it doesn't make sense anymore. And things that you think should be friendly, or the market's lower, and vice versa. And if you sat in on our breakout, first of all, I'm like, I appreciate you having me up here. I barely graduated in the top half of my high school class of 26. And so there's a lot of mental firepower up here. I'm just a simple commodity guy from a little town in Illinois. But if you sat in on our breakout, we said the market's going to do what it's going to do. What are you going to do when it does? So we're just big proponents of you got to have a plan. You got to have a well thought out plan ahead of time because the market's going to move. The volatility is going to be there. It's not going to make sense necessarily when it happens, but have a plan. And I would agree. I mean, it's not the market doesn't care what your break even is. It doesn't have to reach a profitable level, and it's probably a year to be defensive. And there's lots of tools available to stay defensive, but still have some upside available to you.
I'm going to add one thing, and you guys have heard me say it before. I think having a plan's important, but I think a plan. It's cheap. It's a commodity as well. I've had 100 diet plans. Didn't work. Got to execute, guys. Got to execute, families. Got to execute. Had a lot of plans. Didn't execute. You guys all say the same, right? Mike Mock, right down there with guys not executing.
I got that written right in caps.
I hear you
Execution.
talk. Tell them what you're seeing out there, you guys.
Well, a couple things, and it's great to hear from Brian, Howard, and Carter. And I think to ignore it or to put your head in the sand, you do that at your own peril. I think what Matt and Chip and I have to do is make sure that we're working with our clients to the point that they live to see it. And Matt and I were chatting about this on the way up to the podium that the farmer is frozen here, more so than I could remember in a while. There was a nice jag on new crop beans sold north of $10. You get a $2.34 break in about 4 weeks, and they've crawled in the hole and haven't sold anything since. They don't put in the subsidy that's been granted to them into their revenue stream, which I don't understand. They don't consider the fact that some of them raise 75 or 80 bushel beans. It's just, I can't sell beans at these kinds of cash prices instead of focusing on the revenue. And I don't know, Kevin, if this is year 4 or not, but March 20 corn settled at 405 and a quarter. And it's done that, I believe. This is the 4th year at this conference we've had a chance to sell the deferred March at those kinds of values. And, you look at these carries and will we be able to earn it? I think that every grower has to be in a position from a cost of production standpoint that he or she can make money at that price and get some of it sold. And I want to throw a little bit of a crop insurance angle in here too. If you sell 405 red March corn and we get out to next February and that one stings a little bit, let's say the board things have happened and now it's 450. Well, at that stage, where's the Dees 20, okay, which is 412 3/4 today? That's going to be significantly higher too. So if that trade that I just suggested, and I think it's for all the right reasons, and it gets you in trouble, it puts you in a position to get your whole enterprise much better protected with a crop insurance policy for the next year. Not to mention, think what your balance sheet looks like. What's your dirt worth then? What's your iron worth then? So I continue to be frustrated about the lack of action, the inability to execute, knowing where we're headed. This isn't going to slow down and make it easy for everybody. It's going to be just that much harder, just that much faster. You have to mind the business, whether it's with me, Matt, Chip, find somebody, because what these folks are talking about is coming down the road.
Yeah, it's not just coming down the road, it's here. And the thing is you can't see it. And I want to try to explain it a little bit from my standpoint, because I really want you to see what I see or feel what I feel. And it's not fear, greed, or discretionary mistakes. It's just cold data. I believe markets exist to trade. That's a weird statement. I heard earlier today somebody said markets exist to rip the face off of the high-cost producer. Markets exist to trade. If a market didn't trade more than last year, if the future wasn't bigger than the past, you'd lose faith in it. In a sense, this open outcry system is all about saying, I have real-time price discovery, I feel good. I actually believe that the market pricing mechanism is a form of superintelligence. It's a way for all these different participants to share their belief about what something's worth. And you don't have to understand the calculus that they use to figure it out. You just have to see what they're willing to actually do, whether they're willing to buy or sell at a certain price. And so, in a sense, if markets exist to trade, then you can figure it out because all the market participants get paid in trades. People who produce research only get paid if people use the research, and they're not going to use it if they don't trade. People who are market makers get rebates and stuff. It's really important to recognize that markets exist to trade. The reason that's important is the only way for there to be more trades is for there to be faster trades. And let's think, even call it out loud. When your father bought a stock, how long do you think he held it for? Years? A lifetime? Right now, across all the New York Stock Exchange, if you looked at all 10,000 plus equities, what's the average holding time right now? Not months, not weeks, not days, not even minutes. It's 21 seconds. 21 seconds. So if somebody says to me, the Fed's policy on this affects the price of that, no, it doesn't. And it doesn't because 90% of trades are electronic, more than 70% are algorithmic, and those 70% of the trades that are algorithmic that are being made in seconds certainly isn't considering trade wars or tightening policy or any of that. In fact, this ecosystem used to be about the collective fear and greed of populations, and it's not anymore because this ecosystem includes governments, but it also includes machines now. And the cool thing is that the machines are making billions and billions of calculations. And so I heard my good friend Andy say that things are less transparent. They're not less transparent. They're much more transparent. It's just it's happening at so fast a speed that humans can't process it. And so I want to give you a weird statistic that's true. In the old days, if I wanted to buy something, I would look and somebody said, hey, I'm willing to sell this for 100. And I go, oh, I'm willing to buy it at 100. And then there's a transaction. So we touch the system 3 times. In a typical option trade now, there might be 1,400 touches because somebody said, I'm going to display this price, but if I see this movement, I'm going to do this, and if I see that, I'm going to do that, and I'm only going to do it for 2/100ths of a second. It's the mating dance of robot parasites, but it's happening. And even though you don't see it, it's there.
I think Howard might have hit his head temporarily.
Howard, can I ask you a quick question?
How is that going to help us price our corn tomorrow?
Right.
Because what you'll recognize is that you can't predict random, and in a sense, you can't hope for something. You've got to be prepared for everything. It is about execution. Yeah. And there's a difference between guessing and knowing's more profitable. And what you have to figure out is what models actually have positive expectancies.
Let's time out a minute. Howard just brought in I'm serious, like a $30 million IBM computer. We don't have those to do.
But you're not ever gonna
trading model. We're trying to figure out how to price corn. Yeah. I mean, we're all sitting at home with a normal machine here trying to price corn. I understand.
But you know what? You can't ignore the fact that those things exist. And I want to bring up one last point, and then you can tell me that you guys don't have it, and I'll tell you it's available as a service. Not from me, by the way. But what I'm going to tell you is in Algo 101, right, in the beginning there was an algorithm and it was good, right? And the algorithm helped you do something reliably, repeatedly. But then all of a sudden they got to like if and then. But markets are infinitely more complicated than if and then. It's why trading systems didn't work. Then they became dynamic and adaptive. But now they learn. And now we don't write the AI anymore. The really good AI is written by AI. And not only that, it's not the same today as it's going to be tomorrow because it learned and mutated. And so what am I really trying to say? They're now learning to communicate. This is scary. Think about drones. One drone's kind of cool, but 1,000 of them that can operate independently or together, scary as hell. As these algorithms learn how to talk, one of the first things we do is we interrogate other algorithms to ask how they're doing, and right now they respond. But really quickly, algorithms are learning to lie. They figure out whether you're friendly or foe, and if you're not friendly, No, you're going to see
All right,
huge
this
market
is like what I go
manipulation.
through on conference calls with Howard at times. Andy, where are we?
Oh, God.
Look at him. He is eating up with. I tell you what, he's got the best Dallas Cowboys tickets in the world, though. That's why I love him, and he takes me to some of them. I'm talking primo. We went down for a Chiefs game, and we ran over almost 2 players when he was driving in. We go underground through armored guards, all kinds of shit.
I got something I just have to have Howard answer, and I think he'll know an answer, but it needs to be short. USDA.
No, that ain't gonna happen.
I know. USDA, I know because I talked with Seth Meyers, who's the chair of the World Ag Outlook Board, was scared to death when they incorporated the Chinese numbers in the last USDA report for the WASDE that doubled the carryout, global carryout, put 5.8 billion bushels into it, that it was just going to drop the market because the black box trade wouldn't understand it, and it didn't happen. Do you know why? How did the algorithms know not to trade that? Because it was an enormous number.
So what I'm going to tell you is none of our trading models look at the stuff that you'd think we look at. What we're doing is we're looking at price and how, if you think every person in this room is an algorithm, we're looking at the metadata of all the different algorithms to figure out where there's skill and where there's luck. And I guess what I'm really saying is you should understand that confusion's a catalyst. Every trade happens because of a disagreement. Somebody has to think something's going up, somebody has to think it's going down. For there to be more trades, the market has to confuse more people. So confusion is the catalyst. And what you're going to see is increased volatility and noise, but it's actually for much shorter periods of time. So those mistakes, those crashes can still happen. They're just going to be spikes. And so what happened is you didn't see the bots that follow that make money. And so you switched to something that did. It's really simple. Again, guessing and knowing. It's one thing to say, I think this is what it's going to do to the market. It's another to actually watch how the bots are performing and say, I see where the money's being made, and it's not what you would guess. Anyway, that's my answer.
I hear you. Matt Bennett? Matt, tell me something now.
Well, there's a wealth of knowledge up here. There's no question about it. I agree with a couple things that you said, Kevin and Mike as well. The thing about this whole deal, in my opinion, is executing some sort of a plan. Whenever we hear about everything that's going on up here today, there's a lot going on here. I mean, there's a lot to process. I'm still trying to figure out half of what's been said myself. But the thing is, as a producer, as a corn producer, if you will. Let's talk about corn for a minute. Sometimes we can read too much information, and sometimes we can confuse ourselves way more than what we need to. We should definitely educate ourselves on what's going on out there. Yes, this market trades extremely fast, but if we don't know our operation like the back of our hand, then we're missing the point, because unfortunately we can have all the knowledge that there is in the world, and if we're not able to pull the trigger when it's time to pull the trigger, we're screwed. And that's what we've had the last 3 years. We've had opportunities. The market's tried to give us signals that there's profitability on the table, and I know what a lot of folks say, well, I don't know what kind of crop I'm going to raise, and that's what risk management's all about. You have to know what your farm, where your break-evens are. I mean, that's an old thing, but the thing is, we haven't mastered it yet. And what it boils down to is we've got to get better at what we're doing. And one of the main things we got to get better at is we've got to be able to, once we put this great plan into place, as you said, Kevin, we got to do something about it. And so people keep asking me, what are you doing with the G20 news? You know, what are you going to do with that? Well, if you don't have offers in place somewhere above the market right now, I think you're nuts, especially when you're talking cash beans. I agree with Mike. I've had people in Central Illinois tell me I had 82 bushel beans, but man, I can't sell beans at $8. Well, 82.5 cents on top of $8, plus probably another 82.5 cents. How in the hell can you not make money there? You know what I'm saying? And half those guys had 40% of their crop sold at $10. And you're going to tell me you can't sell at $8 beans? We've got to get better, though, at knowing exactly what's going on. Plug that into your profitability spreadsheet. If you're not using the 82.5 cents, you're crazy. But we have to have some offers in, I think, going into this. I'm also of the opinion that we need to be looking forward. at least locking in something. I mean, we started about 405, 406 basis, the D's 19. We just setting hedges in place. And I do think a lot of folks have said lately, $10 beans, we've hit it the last, 6 years in a row. Does that mean that we're going to this year? Well, I don't know whether we're going to or not. Am I going to bank everything on that? No, personally, I don't. And I do farm. And I will tell you that if I get a shot at 975 beans, you better believe I'm going to be jumping all over that.
But it is about execution. And what I hear Howard say, there's going to be more volatility, and it's not going to make sense. And without a plan and executing and pulling the trigger, what if beans make a 40-cent move that doesn't make sense? What are you going to do? Matt said, if there's no offers
And
in
they're
there,
gonna.
Yes.
yeah.
Yeah.
Look at oats, look at crude oil, look at the KC Chicago spread. There'll be plenty of opportunities, but they come quickly, and if you don't have the open offer in place, that's the issue.
I think there's a lot of folks that think that if we get good news coming up, and let's face it, I think with what happened this week with GM, there's some pressure that this is going to have to go well. Some sort of positive language needs to come out of this meeting, okay? And so, but I think that people are thinking, well, happy days are here again. And we're going to start selling beans, and this carryout's going to start dwindling. My personal opinion is that you might see a really quick jolt higher, and then you may have missed the opportunity. And so, if you don't have your offers in and you miss the boat, don't think that you're going to be able to make that decision on the fly.
Yeah, I think that's a consensus. Andy and I were talking last night at dinner. I mean, we're probably selling into positive news. I think that's exactly what you get. I mean, we get a big hurrah out of this meeting on Friday or Saturday, whenever the headlines come out. I think we're probably selling into it on the bean side of things. I just don't know if it'll have much meat to hold. It just doesn't feel like the market can hold those headlines. So,
What if you get positive news, but beans don't rally? Then everybody's going to be handcuffed.
Well,
and
that's
I think
what probably happens.
That's your biggest signal yet to take action. If you get friendly news and the bean market doesn't rally,
yeah, I'm gonna have.
Then you probably better be selling it. And that's going to be the hardest thing in the world to do.
I want to say something that you said earlier, and it's simply if you don't know what your edge is, you don't have one. So high-frequency traders understand they have execution alpha. Their goal is to trade because they make money on the trade.
Well, what edge does a farmer have?
But if you think you have strategic alpha because you know something, make your stand and do it. I just think if you don't know what your edge is, you shouldn't be speculating.
Yeah. Kevin, wheat acreage 2 months ago, up 10%, right? Not today.
No.
So what are we going to plant? I think, corn looks to be number one to me.
Yeah, everybody's been talking. I mean, I keep hearing guys tell me we're going to plant 4 million more acres of corn, maybe 3 million more. What are
More spring wheat?
I mean, it's hard for me to imagine we're going to plant more corn, but I guess we're going to. I mean, is that what you guys
I don't see that.
You don't? I'm with you. I don't see it either. I just don't see how guys are going to swing it from a cash
Costs
flow.
are higher than a year ago.
I agree. That's why I said
I
that.
think the banker's going to be involved. He was already involved last year.
Let's talk corn. Is anybody bullish? I'm slightly bullish corn. Are you guys bullish corn at all? No?
Kevin, I would just say if that's the case, then everybody better reshort their beans. I mean, it doesn't cut both ways.
I think beans are the weak link to, I think corn, world carryout shrinking, domestic, until we had the curveball from China. Domestic carryout shrinking, demand's good. But if beans can't do anything,
if beans
there's
rocked,
a definite
right.
ratio there and relationship.
Todd, what are you hearing? Most of the questions people calling in every week.
Well, mostly I think it's kind of odd. I think farmers, whether they're sold or not, depends on whether they think Trump's going to deliver this weekend or not. I think that's their only decision. They've had the whole $1.65. I really threw them.
So what happens
because
if he
they couldn't
doesn't
figure
deliver?
it out?
So what if it's just nothing? Then everybody's going to throw the towel in and we're going to break?
No, I think they'll hold with him. I think this market is a political market based on the president.
I'm with you. Right now, anyway. What do you think, Andy? I mean, I agree right now.
Yeah.
It seems to be the consensus. So, And most of the farmers that I talk to and our partners, I mean, they ask one question: how in the hell can we make more money? I mean, how can we make money in this environment? And I think that is the question. I mean, do you guys have insight into that? What are your thoughts?
You're not supposed to. Like,
Yeah.
if we're a truly free capitalistic market, you're not assured profit every year, right? So it's supposed to take the production out, the least productive, highest cost out, shrink the supply, and then you start the cycle over again. And that's my fear with these subsidies. I don't want to be the bad guy or be negative, but I don't see how that can give a false sense of security on the bean revenue this year and not skew the acreage. So I don't know. In some ways, we're not dealing with letting the free market rule in ag right now, and that's a little scary.
Wait, did you just tell me that Brazil was the low-cost producer because they don't have infrastructure?
Say that again, Todd.
Did you tell me that Brazil is the low-cost producer of soybeans because they don't have infrastructure or government payments?
That might not. We're $1.50 FOB out of the field, aren't we? At our farms in Brazil. I mean, we're paying some bread for infrastructure. I mean, don't you agree, Andy? I mean, it's not free. I think what makes Brazil. I mean, sometimes our storage is our Achilles heel. The farmer just continues to store and just kick it into storage, and Brazil's kicking it out, and Ukraine's kicking it out, and Argentina's kicking it at whatever price the market is at that point. So sometimes our massive ability to store has become our Achilles heel. Do you guys agree with some of that?
Yeah, I mean, we've been the residual supplier of wheat for decades, and we're quickly going to become the residual supplier for soybeans, I believe. And yeah, I mean, the U.S. has some logistical advantages in terms of transportation over South America, Brazil particularly. But that's limited to that point. And right now they have obviously the cash basis premium because of, you know, the premium they're getting versus U.S. FOB values. I mean, that FOB spread's never been wider. And, you know, but on the other hand, you have a weak real with that trades in dollars and a strong dollar, and so things look pretty good down there, as opposed to us being the high cost producer. But high cost producer in a country that's as heavily subsidized as ours doesn't necessarily mean that we're going to back down anytime soon.
We open it up. If anybody's got any questions in the audience or different type of stuff. Andy, what are you doing with? Andy's been trading some pot stocks a lot. You guys trading any pot stocks? You've traded a few every now and then.
McConnell's heavy on him.
We had cryptos last year. That was an experience.
How's that doing?
Yeah, I still have. I think I have just under 10 Bitcoin right now. But let's just back this up a minute. When we were here last time, I told you I bought it at a good price. We went to I'll just tell my wife's here to back this story up. A few weeks later, and Andy will tell you, prices shot way up, and I was at the gym working out, and I had 3 people that were crypto experts all of a sudden and telling me things about crypto. And they don't even know I trade. They don't know anything about my history, background, or anything. I'm just in there working out, look like some idiot in the gym working out, and they're telling me all about these cryptos. I go over to my wife. She gets off treadmill, and I said, I have got to get to a computer as quick as I can. And she's like, why? I said, I have got to blow out of this Bitcoin stuff immediately. I have seen this one too many times, and I sold fairly close to that. And then I kind of started buying in again down at around $5,000. And I don't know. I think I'm going to ride it. Just sit patient for a while and see where we drift lower to. But Andy will tell you the day that he was at Top Producer, I was speaking to Top Producer, and we met a couple of farmers downstairs, and they just told us, yeah, we got to put in we got new planes. We got to put in a new runway. The runway's too short. We got to put in a longer runway. Andy and I are drinking, and Andy looks at me, and he hits me, and he's like, did you hear that? Did you hear that? And I said, yeah, what? And he's like, oh, this is the top, dude. This is the top. Sell everything you can. Just go out and sell. I'm not kidding you. And you were within a day or two. I mean, it was right there.
Right there.
Remember, Mock? I mean, everything was getting crazy. So when you start hearing that big buzz about different things, I don't know. you might want to. It's time to sell. Don't you guys agree? I mean, you guys have seen it many a time. So
Interrupt him in order to get.
Are you alluding that to pot stocks?
I'm alluding that a little to pot. I've had a lot of guys ask me and call though about growing hemp. And legalized hemp. And
Pot is going to get bigger and bigger and bigger. I just had a guy in my office, the biggest legal grower in the world.
I think he smoked some.
He came to my office and he had 6 security guards with guns, and I mean, they're making a lot of money, and it's Oklahoma just legalized it. I thought that would be like the last thing I ever saw, but I mean it's going to get big.
Yeah. So Kevin, we have recorded both THC and CBD and have WAV files for them, so you don't have to ever grow another plant as long as you need it, and you can download it on your phone.
Kevin, I've got a question back here.
Yeah.
Here you go.
Yeah, I fully understand like when trying to decommoditize commodities, which I think is what Indigo is trying to do. But right at the start of this conversation, there was a lot of talk about how Indigo, you felt like it was really going. Investors love Indigo; they know how to raise money. But as farmers in our area, we're not seeing adoption, and so I don't understand, I guess, what the investors see that a farmer like myself who's open to trying to add value and try to decommoditize something that is a commodity, but I'm not necessarily seeing the value that Indigo is bringing beyond what a good merchandiser could do by identity preserving your product and shipping directly to a mill.
We talked about that exact same thing this morning at breakfast. I'm a little bit on the fence with you as well. I think we'll hear from David Perry tomorrow. I know they're making a big splash and, like you said, raising a lot of money and making some waves. Howard, Brian, maybe you guys could. Carter, what?
I'm actually a little bit surprised I haven't heard more about blockchain at this conference. I figured I would hear a lot more of that, but Carter, go ahead.
I'm not sure whether Indigo is going to make the thing change. The main point I'm trying to make is in the near term, technology underperforms the forecast. In the long term, it overperforms. And so, as an investor, we invest over a 7-year period. As I hear this conversation, it reminds me of a study I did when I was in college around why public housing doesn't work. It feels pretty crappy to live in that environment, and there's a certain point where you got to break free, and I don't know how you're going to do it, but the way you break free is going to be through commoditization. And the thing is, on the other side of the horizon, on the consumer, they want to be decommoditized. And so with Benson Hill, that's a company, there's 7 crops that have been GMO'd, 30 that are principal crops, and there are 3,000 edible crops. So when we look at a Benson Hill, we are looking about expanding the available food system because we're hearing that from consumers. And so on the other side of the equation, you got consumers saying they want more diversity in their crops, and on your side, you can't break through the crap of the system to offer it. And the guys in between are going to get disrupted at some point. And some of you are going to make the decision to have a field of dreams moment of going down some of these new crops and beating through the hell of getting people to do the offtake and take it. And maybe it's Indigo, and maybe Indigo blows up. I don't know. They are good at raising money. But it will be like the telecom market. In 1982, everybody thought that Milken was insane, and by 1990, he wasn't.
Of course, I think we have to remember that we talk about Indigo so much because it's the exception, not the rule.
Yeah.
The incredible amounts of money. As a investor, I keep thinking, how in the world are the investors going to make money on this unless there's this spectacular IPO? But who's going to buy it?
But go back to Milken. Milken, $1 billion of junk bond debt in 1982 is equivalent to $3.5 billion valuation for Indigo. It's actually more insane. And
different.
The choice has got to be. I mean, people in this room are going to make this choice, and you're going to look like an idiot for 5 years, and then on the other side, you're going to look brilliant.
But wait, Kevin, I just want one last piece on this. When I do long-term planning, my brain first thinks about all the things that are going to change, and I can't help it. But I have to eliminate those thoughts because, in a sense, they're mind killers. Instead, what I try to figure out is what won't change. And so let me give you an example that's not farm, only because it'll help you think. Cars. Your kid, his kid's never going to learn how to drive. I mean, think about that. I mean, I actually believe that there's very little chance that your grandson will ever learn how to drive because autonomous cars are going to be there. And then once you have autonomous cars, why would somebody even own it? They'll only rent the ability to go from here to there. I mean, it's going to change so many things. So if you're an investor in that space, you have to think, well, wait a minute. The producer of the car is probably going to do the insurance, and insurance companies are no longer going to insure your car because it's not your car. They're going to have some. The point is that whole industries are going to terraform. Your industry is terraforming. Don't think about all the ways you want to change it or what's going to change. Think about what's not going to change and how you can be an important part of the value chain on the other side of that change. That's what I want to say.
Yeah, makes sense.
So what I'm kind of hearing here is two kind of worlds: a commoditized world and a commoditized world. And it might not just be indigo that's driving the decommoditization of the crops. It might be other players, and that's going to drive adoption. It's going to make it easier, right? On the flip side, though, you also have the rest of the world who's not dealing with first world problems, and there's still a commodity angle there. So I have two questions. The first is, what's easier to be, pursue the robo-hedging concept for a farmer on the commodity side, or is it to go after the decommoditization because that's what the first world's looking for? And then the second question is, what is your guys' opinion of the new grain bridge launch or announcement between the JV between ADM and Cargill?
All right, I'll go. I think decommoditized or commoditized is simple. You got to ask yourself where you're at. As I said, can you be low-cost producer? If you're in a commoditized market, you need to be low-cost producer. We've always been that because we've had a technological edge. You guys were better farmers than everyone else in the world, and you had a technological advantage. Now that technology's been exported globally and everybody can get their hands on it, and the edge is kind of closed down. So, I mean, if you're, like I said, if you're a producer who owns their farm, you're cash flush, hell, you're probably golden. You do number 2 yellow corn forever and beans same capacity. If you're not, and you're in that, like Andy and I will talk to some of our friends, I'm sure Matt, Chip, Mike, tell you my break even's 440, 450. Well, are you factoring in the family cruise into that each year, or are you not? Are you factoring in the BMW and the other items, or are you not? I don't know. We like you said, we haven't figured out how to get our break evens to where they need to be. So if you're in the 450 range, 440, 450, you're not low cost producer. I'm just letting you know. Heads up, you're not. You need to figure out a way to pivot a little bit and do something. You may have to decommoditize and go direct. And I think Indigo is trying to provide an outlet for people to go direct. I'm with you. I don't know how well that happens or plays out in the up front, but it seems like that's where people want to go. I think
here's one thing about Indigo is it might work.
Yeah,
That means it's possible. It's like somebody escaped it, and so then they'll, it's always early bird catches the worm, second mouse gets the cheese. I don't know which one Indigo will be, but there'll be more.
Yeah.
And it might be Amazon.
I'd say why be all or none, right? Be an early adopter, and if it works for you, you're ready to pivot quickly.
Yeah.
Why does it have to be all or none?
No.
I totally,
I'm not suggesting, but
there's no all or none on my part.
Yeah, I'm not suggesting you said that. I'm just, that's my thought is.
I think they got to start.
Let's all decommoditize.
Yeah, a little
right?
bit, yeah.
I don't know where the balance point is, but one nice thing about decommoditizing is it makes it better for the people who are still a commodity because you've got some constraints.
One more question,
Positive
Kevin.
externality.
I got to finish second part. Cargill, ADM, Grainbridge. I love my friends at ADM. Now I'm doing pricing for them. I think the Grainbridge thing is going to work out great. We've used Grainbridge some in the past, so I don't really know how it plays out. Looks like they've got a good grasp and a good, like I said, a good strategy to bring some things forward. So it'll be interesting to hear what they have to say. Go ahead.
I guess, Kevin, I don't know if this is a question or just a frustrated bitch, but you can decide, I guess. But you look at India's population, 1.4, or China's 1.3 billion. You look at the carryout stocks China just released that put the burden on the carryout for world. I mean, that can't even be a realistic number if you look at the population between the two countries similar. And, you'd look at the Walmart business plan. If a company gives you 80 or 90% of their production, Walmart owns you, and sooner or later they just nickel and dime you and break you anyway. So, China rejects our ships for Starlink and antibiotics and growth hormones. And at what point are we so tied to them that they quit being a trade partner and a trade nemesis?
I think.
Well, they're all
I've always felt like China was the best marketers in the world. I mean, do they play fair? Not necessarily, but I feel like they've always been about as good a marketer as what could be. I think that what you've seen in the last several months is kind of trending towards what you're just talking about. I mean, they're not in our soybean market to speak of. Are they getting them through the back channels? Yeah, I would say to an extent. But for the most part, if we don't get something worked out with them right away, you're going to find out, I think, fairly quickly what the decoupling is going to look like. But I think your world economies are going to continue to struggle if we don't get something worked out. So it could be a very tough, arduous process. But if you don't get something worked out, I think you're going to find out pretty quickly.
Todd was just telling me he's had a few questions, multiple people. Say 2021, 22 beans, November. Further out, you're going 3-4 years out.
So you're at 70, 985, something like that on November beans that far out.
What do you guys think?
I think it's hard. That's hard for a producer to go out that far. I'm not saying you shouldn't.
Yeah.
What's your rotation going to be? What's input's going to be? What if they triple?
I've personally never had any luck going that far out. I have some friends that do go that far out, and they're religious about it, and they execute. And I think they've had some good.
If that's in your plan and you do that
Yeah.
consistently, more power to you. Go for it.
Right.
It's a hard lift for me, for a producer, to go out that far, because things can change so fast.
And you really don't have the carries right now to justify it out in those red versus green years.
Todd, you got anything else? I'm sorry it went this long with folks. And
I
guys, you got
have a
anything?
question for you.
Oh no.
Yeah, no, it has nothing.
Here
to
we
do
go,
with
buddy.
AI.
What do we got?
What about fake meat? All of a sudden, you're going to be able
Fake
to
meat.
produce. You're going to be able to produce and 3D print things that look like food. What happens when they can?
Well, I think we have the clean meat. I think Bunge's invested some. I think Tyson's one of the biggest investors in fake meat. I suspect is a hedge against their current.
But my point is, I would anticipate more things being able to be 3D printed. I mean,
With thin biology, you're going to see a big shift, and we're investing in that area. It really is fascinating what you can do. I was with some folks up at MIT, and we were talking about building Lego blocks of gene structures that could be assembled. We can program genes to if-then-else logic. In the grand scheme of things, how does it affect? Normally we say at the end of the day you need a retailer and you need somebody on the land to build stuff. I think that it will hit and affect probably specialty crops more, I think, maybe. But we're looking at new fermentation technologies that could potentially scale that. We're looking at devices. You can imagine you could take like an FPGA. You don't probably know what an FPGA is. You could take microfluidics machines, and you can actually build chemical plants on a chip and drive that price down and do fermentation on a chip and scale that. So there's a lot of wicked cool stuff coming down. It's just going to keep putting pressure on you. And as long as you stay in a commodity space, you're going to...
Or it's going to create opportunity. And it's simply
Well, it creates the
matter of
opportunity,
what
like I said about the AT&T thing, is nobody had any idea the iPhone was going to come out in 1982, except maybe Milken.
You know what the best thing about 3D printers for these guys is going to be, I think, is that they're going to come out, they're going to have a 3D printer on the back of the truck, and when you need a part, they're just going to print it for you.
But I want to say we're on
or you'll buy one
there's a-
because it's parts,
Can I say one?
and it'll just be sitting in your shop, and you'll print the part for yourself.
I don't want to get totally wild here, but put yourself back in 1982 when that happened, when AT&T broke up, and look at where you are today, and we're starting through a similar cycle, and your businesses are going to change. It's not going to totally rip you apart in one day.
No, I agree. I think, too, along these lines, I think we need to talk land real quick. I think there's a lot of alternative things happening with land that is immensely beneficial or could be profitable for lots of people in the rooms. About 6 months ago, I had a call. 2 people called and said, hey, we don't have to market much corn this year, man. You did a great job. We just leased a bunch out to solar. And I said, oh, really? And they said, yeah, $1,100 to $1,300 an acre. And I said, wow, no kidding. How big a plot? I'm thinking, 5 acres, 10 acres. No, 800 acres, 1,200 acres, 1,500 acres, 10-year and 15-year leases. I just heard one this week. They called into the office and we were talking to them. 3,000 acres at, I don't know, it was over $1,000 an acre at almost in a 15-year lease. And the ground in those areas is going for $180 an acre rent. And they're paying that type of premium for these solar fields. And I'm not positive, but 3 or 4 of the deals, and I've talked to other folks here when we were down in the Boot Hill and some other places, 3 or 4 of the deals came, think about this for a minute now. Remember when the big power plants would go in, or power plants would go in certain areas, and everybody in the community would bitch a fit, nobody wanted to live by them, and the ground kind of went down in value. A lot of that ground was piggybacked next to and butted up to some of these big power plants. The power plants weren't buying them. The solar plants, the solar fields are coming in and telling the power plant they can piggyback off of them on peak times. And I think that's what's building juice or premium into the payoff. So I'm thinking in my head where all the technology is going as well, it may not be, hey, Warren Buffett and Gates' foundation is not trying to improve crop growth on black soil in the middle of Iowa and Illinois. They're trying to improve crop growth on C-grade ground, bad ground. I'm not sure maybe the play isn't in maybe owning some of the more bad ground for alternatives that we haven't really thought of. I'm not sure. It's like these guys keep coming up with crazy crops to grow on crazy soil, and now the solar just switched. I'm telling you, this solar thing just happened within this last year, since our meeting together last year. And it has flipped on a switch on what people are getting paid now on some of these farms. It's game changer where they're done. They're done talking about corn, beans, and wheat. Let's put it that way. And now there's alternative uses for your farm. I don't know. A lot of it's based on proximity to the grid and the sun and the tilt of the earth. And there's some formula where they're going around and bidding up, but I'm telling you, I'm looking to buy and bid on ground that's attached to some power plants and facilities around here where I think you may get a discount. If you see Hyperloop terminals go in, and what happens like we talked last year? Okay, they're going to shoot a human through a tube 750 miles an hour, go from here to Chicago, and you'll be there in under 30 minutes. Well, they said, how about maybe instead of humans first, we shoot grain? So you shoot a Hyperloop from South Dakota straight out to the PNW. What happens? How's it change logistics? How's it change infrastructure? I don't know, but I think I want to buy ground along that route. And I know people will bitch and won't want it to go into their area, and that might break the price. That might be an opportunity to be a buyer, is my thought.
So Kevin, in my company, one of the things we have is an equation that tries to predict our ability to make money. And one of the most important variables is the number of ways you can win. In a sense, you need more ways to win.
Right.
And so the point is, you don't have to do all of them. You only have to have the research done so that as the opportunity presents itself, you take advantage of it. But it's all about recognizing that diversification in your business now happens at the choice level, not only the deployment level. And you have to start to think about these things now so you're prepared when you see the opportunity.
That was nice. That was nice, Howard. Mike, you got anything to end? Anything to wrap up?
I've got a big number in mind. It's 2920, and next November, that'll be how many days since Michigan was able to beat Ohio State?
You guys, Brian, anything to wrap up? We'll close it up.
Nope. It's been very
Nope, good. Everyone, Andy, Chip.
Kevin, just one question. What's your view on indoor farming in row crops and cereal crops? Do you see that happening at all?
What do you see, Howard? I mean, Carter, what are you seeing on it? I'm going to defer that for a moment.
There's a 40% waste in the supply chain on specialty crops. I think we're going to see a lot of opportunity to really sort of screw around on that side. If I didn't fully hear the question, in terms of row crops,
We talking vertical farming?
Lettuce,
Indoor.
lettuce,
Interior.
indoor farming, lettuce.
Yeah, we're seeing a big push on the vertical farming side. Yeah, I'm not sure it's going to affect our audience.
No, I don't think it affects this audience. I'm not positive.
Not
but I don't think
nearby,
it does.
probably, but your specialty crops for certain. We're just seeing a more controlled environment, better lighting. Some of the technologies just come on like gangbusters, and we think that is probably a game changer in some of the urban areas. We're going to see more. We've got farmers in Iowa that turn the pig houses into fresh fish for the chefs that are local or more close by. I think it depends on your proximity of your farm to an urban community, and then we think the vertical farming is going to start to grab hold and probably makes a dent, but it's further out.
Amazingly enough, indoor farming came right back to marijuana, didn't it? I think.
Can what? I can't-
Maybe you're probably right. So, anyone else? Chris, you'll have that out there.
Yeah, I think after listening to this conversation, I'm glad all we're trying to do is cure brain cancer. It seems like it's a lot easier than what
Chris
you're
used to
trying
play a little basketball at Oklahoma for any Oklahoma fans in here.
Yeah, right.
Carter, you good? You'll be back tomorrow morning, so that's it. We'll I'll finish the drawing. Hey, listen, I'm going to bring up a gentleman here. I don't know where Dusty is. We were going to end the night a little earlier, so I mean, Michelle, is he here?
Yep.
He go back home. Dusty, I told you guys earlier. I sit around. We're watching TV at night. Jimmy Fallon,